afternoon, everybody. Welcome to another episode of Moving Markets Podcast. I'm Jeffrey Dunyan, CEO and founder of Safe Option Strategies. Good to have you here on a Tuesday afternoon. Quite the ride in the stock market today. Three major indexes all trading to the upside after CPI data that was less than stellar. In fact, CPI data that I would say was a little bit bad, not horrible, but certainly leaning to the bad side. And in spite of that, the market gave what I thought was exactly the opposite reaction of what I would have expected with the data that came out. So we're going to talk a little bit about that, talk a little bit about the rest of the week and what's going to go on. Make sure you take a minute to check us out at sostrades.com. We are doing phenomenal on our trades this year. You want to be a part of that if at all possible. Good afternoon, everybody. Welcome to the Moving Markets Podcast. It is Tuesday, March the 12th, 2024. Glad to have you here. The U.S. stock market has only been closed for about 10 minutes at the time that we are recording this today. I got to tell you, I'm going to jump right into some stuff that is for the members of Safe Option Strategies, as well as those who are not members of Safe Option Strategies. We're just going to do one podcast for everybody today. I will give a quick update for those of you that are members of Safe Option Strategy. We did get into our NVIDIA trade. Our other trades are doing absolutely fantastic. Nice rebound on Amazon today. We are way up on our other open trades that we have going. And the NVIDIA trade, after opening this morning, took mine a little while to open. Didn't open right at the beginning of the market, but once it opened, it took off very nicely. Walmart is up very nicely. Amazon moving back in the right direction that we want it to. And of course, NVIDIA got into the trade this morning. It's up 5% already. Just absolutely off to a phenomenal start. And I believe that puts our overall profits, our overall returns since January 1 of this year. I believe we're approaching 35% right now on the net return on where we're at in the portfolio. So great start to the year. Okay, that's all I'm going to say. Yesterday, if you listen to the podcast, I talked a lot about this CPI report, and it wasn't a real long podcast, but all of my conversation was about kind of the what if on this CPI data. You know, what are we going to do if this happens? What are we going to do if this happens? And as it turns out, I made a prediction. I said that I thought this number would be a little bit higher than this. It was. I thought this number would be a little bit higher than this. It was. I thought this number would be a little bit higher than this. It was. And the only number that came in right at the consensus estimate was the month over month, which was up from the prior month, but in line with what the estimate was on what it should be. But I feel like I kind of accurately predicted that we'd be up just a fraction from what these numbers were. I thought this number could have even been 3.9 or 4.0, but it did come in at the 3.8. So I was kind of right in the prediction that these numbers would be a little bit higher. What I was absolutely 100% dead wrong about was what would happen if these numbers did miss. And my expectation was that the market would sell off and we'd see quite the down day. If you were watching this morning when futures were trending on the news programs, Fox Business News, CNBC, they were showing market futures in 30 minutes or so before the market opened. Things were pretty flat in the Dow, up a little bit in the NASDAQ, pretty flat in the S&P. The news broke at 8:30 a.m. Eastern time, and within a few seconds after these numbers were reported, the Dow dropped down 122 points. The NASDAQ went from being positive about 72 down to being flat. I think it got down as low as 2.5. And the S&P went from being pretty flat down to being about 20 points down. By the time the markets actually opened, NASDAQ futures were back up to where they were before the news broke. Dow futures were back up about 20, flat to about 20 points to the upside, having dipped 120. And NASDAQ futures were up about 10, 15 points, having dipped down 15 or 20 points. I watched the market trade today, not every single tick of the market all day long. I listened to commentary from different people. And I'm going to tell you, I still don't know why this data caused the markets to go up instead of down. I was fully expecting the opposite. And the reason I was expecting the opposite is if inflation is poking its head back up a little bit, and these numbers indicate that that is at least a possibility, if not a probability. If these numbers are starting to go back up a little bit, that dramatically lessens the chance that the Fed is going to cut interest rates. In fact, it almost suggests that the Fed may possibly raise interest rates one more time before they start cutting, or that if they did a cut to kind of stimulate things, that they could end up raising again after that. Right now, the market expectation is 99% that the rates are going to stay the same when the Fed meets next week. They're meeting next week, Tuesday and Wednesday. They'll come out with a rate decision on Wednesday. Markets are betting 99% that the Fed will stay with rates where they're at. Just before that report broke out, this was still pretty high, but it was around 95%. It went from 95 to 99% just in the blink of an eye when that report came out. Fast forward to the meeting that they'll have in May, a month and a half later. Yesterday, this was at about 70%. Now it's at 89% that rates will stay the same in May. So this news that came out this morning on the CPI data did in fact increase the belief amongst people trading in the market that rates would not be cut in the month of March or in the month of May. Now, fast forward to June, and you've got about 69% of the market, about 69%, the market is betting that there will be a rate cut. But I'm telling you right now, when the PPI numbers come out on Thursday morning, if they paint the same or worse pictures as the CPI numbers, you're going to see June flip on its head, and this is no longer going to be a 63 to 69% chance that rates are going to be cut. It's going to go back to 60, 70, 80% chance that there will not be a rate cut. And I'm telling you, if we get to the end of July, middle of September, and that's when we get a rate cut, it's going to be impossible for Jerome Powell to not have it look very, very political. It's just, I guarantee it is going to look political. The one little theory that I have about why the markets climbed today instead of sold off today is that the miss was not a real bad miss, and people think that where they were already starting to assume no rate cut in March, no rate cut in May, it almost emboldened people, I think, a little bit to assume there would be a rate cut in June. There might have still been some people out there thinking, well, we could still possibly get a May rate cut, maybe even still a March rate cut. I think today's news took that completely off the table, but maybe it bolstered people a little bit in thinking that there could be or would be a rate cut coming in June when the odds of that were not as high recently. So that's what I see going on with this report. And I'm willing to pay the piper. I'm willing to admit when I'm wrong about something. I was dead flat wrong on what I thought the reaction would be to numbers that did in fact come in a little bit higher than what was expected. Tomorrow, not a lot going on tomorrow in terms of reports. You've got mortgage applications, you've got petroleum status report. I don't think those are going to be paid really close attention to. So if anything, I think this rally will build a little bit tomorrow unless there is some outlier news story that really kind of jolts things in the morning. And then on Thursday morning, you've got the retail sales report and the PPI report along with the jobless claims. I wouldn't trust the jobless claims numbers. I think they get revised too often. I don't think there's any amount of consistency with the way those get reported unless you wanted to say that they're consistently wrong in what they report, because they continually get revised and seems more often than not the revisions are fairly big. And then industrial production, consumer sentiment, import-export prices, those could all play a role in Friday's movement. But if the reaction to PPI numbers, good or bad, is the same as what it was today. Maybe just a confirming story that we know where we're at and have a better idea of what to expect in the future, even if it's not what we wanted. I guess that's a way to summarize what I saw happen today. People felt like they got a better idea of what's going on, even if it's not what they wanted, and the markets rallied on that. PPI, I don't know, maybe it comes in about the same as where CPI did, close to being in line or just a little bit different. This should be a little bit of a concern for people. The prior number was 0.9. It's expected to go up to 1.2. And producer price indexes always precede the consumer price indexes. So when you start to see the producer price index tick up, it means there's a good chance that in the following month, the consumer price index is going to tick up. So you almost better hope that on Thursday morning, this number comes in lower than expected for the year over year number. Otherwise, there goes the narrative about inflation coming down. So interesting. Look, I profited greatly from the market move today. My portfolio did well. I'm set up to make a little more money in a bullish market than I am in a bearish market, but I'm stumped. I like I said, I have a theory on what could have caused the buying, but let me add one more theory to that. I do have one other theory. NVIDIA has made up a lot of the market growth this year for the S&P 500 as well as the NASDAQ. I think people that continually miss out on these big runs up on NVIDIA are looking for any buy the dip opportunity. And I think you had 2 days in a row of some pretty good sell-off on NVIDIA, and that's all people needed to buy the dip. It rallied right up to finish at a high for the day, up, I believe, 61.39 points. Just a phenomenal move up by NVIDIA, 7% up today. A lot more than it gave up yesterday. Still has a ways to go from what it gave up on Friday. So, all right, we'll be back tomorrow afternoon when the market closes with another episode of the Moving Markets podcast and give you an update on what went on and see if we change our tune on anything that we think is going to happen the rest of this week. Thanks, everybody. Have a good day. Bye.